Welcome to another Founder Wisdom Pod. We have Jesse Shrader with us today. He's the founder of Amboss Technologies, also the CEO of that company since 4 years now. So it's an intelligent payments for high volume digital economies. It's built on Bitcoin. He's in Nashville. I'm in Oaxaca. And this podcast is presented to you by topleads.com. That's my agency. If you want better GTM, if you want to crack cold email as a crypto company, you can go to topleads.agency. That's what we do for crypto and digital assets company. Jesse, welcome to the pod. Tell me a bit more about yourself and what you've been up to as of late.
Thanks so much for having me, Charles. Overall, I think we've been building on Bitcoin payments for about 5 years now, and really it's becoming very interesting because Tether, behind the USDT token, recently announced that they'll be issuing Tether on Bitcoin's Lightning Network, which provides a huge amount of opportunity for us because stable coins in general do $20 trillion in volume, at least last year. So it's huge that we're really setting up the payment rails for like the rest of the world's commerce to actually happen, like digitally for one, give many more people access to like digital banking infrastructure as well as digital payments. And the fact that that can happen on Bitcoin, which has really proved itself for a long time, gives us a lot of exciting things to work on. So Amboss is really functioning as a coordinator, so we can actually have a decentralized network, but also make payments happen globally very quickly at extremely low cost. Not able to hear you.
Oh, can you explain what's the Bitcoin Lightning Network real quick?
Yeah, so like the Bitcoin Lightning Network is a payment layer on Bitcoin. Some people might call it a layer 2, but really it's about taking your Bitcoin and putting it into a specific smart contract with another person or machine, really. And basically it creates a side ledger for Bitcoin's blockchain. So to actually make a payment, you don't have to do proof of work, which is that very costly mining operation for Bitcoin. Instead, transaction really just looks like exchanging digital signatures with the other person that you're in the smart contract with. And it really hooks into a network. So a payment I could send through you, Charles, and then actually reach one of your connections, and just function like a network in that sense. So the payments can hop and pay a fee each time for each hop that they do. So everybody in the system benefits.
So it's better and faster. It's cheaper, in other words, or what?
Yeah. So a Lightning Network transaction would probably cost 0.05% on average. So essentially nothing, especially for the small micro payments. And you could pay, less than a penny. One Satoshi, 100 millionth of a Bitcoin is like the minimum size payment that you could actually make. And really it's just us exchanging digital signatures. So it's super cheap, happens very quickly.
How did you get into crypto? What brought you in?
Well, I had a job working in a call center. It was a temp job early on, right out of college, and they were handling class action lawsuits, and most of those were against banks. So the first class action lawsuit that they put me on was where the bank was reorganizing debit card transactions in order to maximize the overdraft fees that they could charge. And it's like, it wasn't in the natural order of things, and that seemed unethical to me. So I was looking for alternatives. Like, show me the bank that doesn't do this. And one didn't really exist. So that pushed me into the, digital ecosystem, and like Bitcoin caught my attention because, the price was going up. But once the price started going down, that's when I did my research to figure out whether or not to sell this thing. And that's when it really clicked that this is the actual alternative to banking, traditional banking, that actually gives people much more power in the system instead of relying or delegating that power to a bank.
And these banks, what were they doing exactly to create more overdraft fees?
So if you rearrange the debit card transactions in highest to lowest dollar order, so process the big transactions first, then if you were going to overdraft anyways, there were more transactions that were in the red if you structured it that way.
Hmm,
Hopefully that makes
got it.
sense, but
Yes.
it just seems wrong. It's not in the order that the transactions occurred.
Right. I mean, yeah, banks do all kinds of things that are wrong. Like credit score is pretty dumb as well. I don't think it's a representative necessarily. It works right, but it can be improved. I tend to place like more faith in like fintechs rather than Bitcoin companies. I think like fintechs are handling it way better than banks, and they're literally trying to create like online banks and entities that can compete with these legacy banks. As a consumer, that's what I use like for my rebellion against banks and their old legacy service. I'm not necessarily using crypto. Don't you think that's what most people are doing?
Yeah, I think a lot of people are using fintechs, especially in the US. But if you go over to Europe, everybody's using the IBAN, which provides near instant payments, and so it's like a kind of different system altogether. But like IBAN actually works pretty well. But when you go to places like Costa Rica, where they've got SimPay, um, that that becomes really interesting. I'm like basically texting money to your phone. I mean, the requirements for you to actually participate in digital payments is really just having a Costa Rican phone number. And so now the Lightning payments have actually bridged into that. So I can pay Bitcoin and they receive, payments, which is using SimPay, which is almost like Costa Rica's Venmo. But the fact that like all of these fintechs, they're not really playing nice with each other. It's not all the same ecosystem. My Venmo dollars are not the same as my Cash App dollars, and those two don't talk to each other, which is just really frustrating. Because like, am I going to have to go back to my bank account, wait 3 to 5 business days before I can actually move money to a different app? Like when really that should just be settling automatically in between those two systems.
Right. Yeah. It's interesting. It's just I think crypto is like the very extreme end, right? That I think it's about privacy as well, and I think most people that want privacy are people that are doing shady stuff, right? And I can see it scaling, but also another preoccupation that I have with Bitcoin is that I do think that someone's gonna crack it one day as the cost of intelligence is going down, AI is skyrocketing, and we're having like better computing. I do think that eventually it's gonna crack. Someone's gonna crack it and hack it and just take control. And if they do that, the whole value is gonna fall down. Don't you think that as time is advancing, the value of Bitcoin or the chances of Bitcoin being hacked is getting up?
Yeah, right now there is over $1 trillion reward to anyone that cracks Bitcoin, and that has existed for quite a while now. One thing to keep in mind is that Bitcoin uses very standard cryptography. So the same technology that secures Bitcoin is also the same cryptography that secures the nuclear codes. So if Bitcoin actually gets hacked, we've got way bigger problems than worrying about our digital money, because now there's open access to any of those things. However, on that front, Bitcoin actually provides the incentives for people to continue to work on cryptography to prevent hacks like this. So that becomes like quantum resistant cryptography, which is like an active area of research. So I think overall the concern is valid. I mean, of course, we don't want things to get hacked, but also, we don't want to forget all of the things in our daily lives that use cryptography. So like ECDSA is like behind all of the encryption for all the existing banks. So if Bitcoin's in trouble, the rest of the system is also majorly in trouble.
Yeah, passwords and all that. But is that cryptography immutable? Like, is it modifiable? For example, the nuclear warheads. I would guess we would update that technology, right? It's updatable, but Bitcoin, isn't it like frozen solid? Isn't it like something that will last through centuries? VS like the nuclear tech, we can just update that to a new technology.
Well, that's an interesting point, and I'm really not sure how nuclear codes get updated. And it's probably due for a refresher since most of that infrastructure was built in the 1970s, if I'm not mistaken. But for Bitcoin, it actually has made changes. Bitcoin operates on consensus, so basically everyone in the system needs to agree to make a change, and that's very different than kind of how banking infrastructure works, where you're going to have a couple of executives get together and decide, hey, we're going to implement a new policy. So Bitcoin is more resistant to changes like that, where basically, as long as this is in the interest of everyone, it's got a good chance of actually moving forward for Bitcoin to implement a change. So I think recently Taproot was implemented basically last cycle. So it was about 4 years ago, where there was a soft fork change to enable Taproot, which allows other assets to be transacted over the Lightning Network and over Bitcoin.
And how does a fork works? Yeah, does it have to be unanimous? And what if I don't agree with that fork? Do I transit automatically to the new fork?
I think that's probably the hardest question that could be asked. But some of the ways that it plays out. So a hard fork, which is like, I cannot agree with the other side. That is what actually spawns new tokens. So Bitcoin Cash was the result of a hard fork. So basically, Roger Ver, like early Bitcoiner, decided that he didn't like the direction that Bitcoin was going, and so he forked off to create Bitcoin Cash, which really made a big departure in how the protocols operate. And it was a hard, non-backwards compatible change. So that was a really confusing time for users and for holders of Bitcoin. Like, which one is the real Bitcoin? And so those hard forks should be avoided at all costs.
And yeah, that Roger Ver guy, did he just wanted to become even more wealthier? Was that like his main motivation? Because that's been my research with most of these folks. They hide behind Jesus values, but in the end, they just want to make more cash, right? And we can see the price of Bitcoin cash skyrocketing the first year, but after that, it has remained sort of stable and up and down. What were your thoughts on that?
Yeah, like generally I would avoid new tokens being created because, there's one Bitcoin and there's 20,000 other crypto tokens. And, most of those were created in self-interest. I mean, there's some interesting things in there, trying new consensus mechanisms, what have you. But really, if they're trying to be the next Bitcoin, I would tell you that Bitcoin is the next Bitcoin because it does make changes. And it operates on consensus. So that is very hard to disrupt and relies on open source technology without a whole bunch of centralized control. So generally, I would avoid most of the crypto tokens out there. I would look at them akin to gambling because, of course, there's going to be pump and dumps and all these other types of things. Now, I don't want to speak to Roger Ver's complete motives. I think he had a genuine disagreement, but also the Bitcoin Cash has really not gone anywhere other than down in value.
Right. And what's the difference with the hard fork? Let's say we agree, soft fork, sorry. Let's say that we agree that there should be some change. Like, how does that work code wise? Like, I thought like Bitcoin was sort of immutable. You couldn't change it. So how do we soft fork that?
Yeah, like Actually, I can talk about future soft fork proposals. One is something that's called check template verify. So this gets a little bit technical, but it enables something called covenants, which mean that if I send when I send Bitcoin, it has to be sent to a specific address and not to anyone else's. So a soft fork really means that it is backwards compatible. So adding check template verify and enabling covenants is actually more restrictive than what existed before that. And so because it's more restrictive, it actually is completely backwards compatible. So you can make a change that where you have more guarantees while being more restrictive, which is kind of a funny way, but it actually works to continue using the exact same protocol, and it all works, behind the scenes.
Got it. And yeah, what are you seeing in the community since Trump came into power? It seems that the current administration is very bullish on crypto. How have you seen the market react to that this year?
It seems like the floodgates are open for really like corporate adoption. The strategic Bitcoin reserve is like the whole name of the game this year, which has been super interesting, but really changes who is participating in Bitcoin. Up until this point, it's been primarily individuals, but now we're seeing corporate holdings increase massively. We're seeing ETF adoption, and having the U.S. administration behind this technology is a good signal, and it's going to be one that I don't think the U.S. would fully reverse tact on because it's been lucrative to participate. I mean, the only winning move is to play, really, and the administration has gotten behind playing and deciding, hey, I'm not going to sell off my Bitcoin that I seize from criminal activity. I'm going to create a strategic Bitcoin reserve, which was really a landmark piece of the Trump administration. It's good for America and certainly good for the Bitcoin price if we don't have an unexpected seller that just hit the market, kind of like Germany did, where they sold off all their Bitcoin. I think that was a strategic error and not something that the U.S. is going to make that mistake.
Interesting. Tell me a bit more about Amboss and how you guys make money.
Yeah. So we've been building on Lightning Network for 5 years, and shortly after we launched the first liquidity marketplace. So in order to make payments happen without debt and without credit, and work on the Lightning Network, basically you have to be matched up with some other folks to actually create this payment system. So we created a marketplace for it where you could get paid to open Lightning channels, which was actually really cool because it made something that has never existed before, where you could get paid like in Bitcoin without giving up custody of your assets. So it actually created a new type of yield. Since we've had that marketplace going, and we take marketplace fees for any of those deals that happen on our marketplace. Well, now we've productized it. So we just launched Rails, which is basically you maintain self custody. It's a yield platform. You deposit Bitcoin in your own infrastructure, and we'll manage it to actually do some of these marketplace activities. So you don't actually introduce any counterparty risk. You don't give up custody, but you earn more Bitcoin with your Bitcoin.
Interesting. And right now you've been running that business for 4 years now. So what's your annual run rate and what's your prediction the next couple of years?
Yeah, for the yield market, it's still evolving. So that becomes super interesting, where people are earning, historically 1 to 4% APY coming out of the Bitcoin that they deploy. So that what we've seen so far is that essentially 1,250 Bitcoin have is like waiting to be deployed on this. So within 3 weeks of launch, we've got $125 million that are seeking yield in this way. So this is like a first indicator of really strong product market fit. So something we're very excited to explore and grow that whole ecosystem.
And how do you do your go-to-market? How do you attract new prospects?
Really, the fact that we've got technical differentiation. So being able to speak to this and having the historical data from running the marketplace for 4 years is really, really beneficial to us. Also, I think from like Nick Bhatia, who wrote a book on kind of the time value of Bitcoin, kind of laying out the theoretical possibilities here, and then we move to implement it. So having that kind of backdrop was really important, and then having the published research on the front of how to do the operations in order to generate this new type of yield on Bitcoin.
And what would be your top objectives for this year? What do you want to achieve?
For us, I think growing revenue overall is going to be really important, and onboarding all of that Bitcoin, putting it to work. And for us, I think just having a lot of visibility into Lightning Network is something that no other company actually has, because we'll have so many nodes deployed and be able to see so many Lightning Network transactions that will be unique in the realm of actually being able to report what's happening, who is using the Lightning Network, and what's the activity like. Essentially, because the payments are so private, essentially nobody has that information.
What are some of your wild future crypto predictions in the next 5, 10, 15 years?
I think this might be a bit controversial, but I think Bitcoin will become the strategic reserve asset for the world. And I think we're well on our way for that to happen. And I think the strategic reserve currency will likely continue to be the US dollar. So what people are transacting, they'll be thinking in dollars, but what they'll be holding as savings, for the world, especially as deglobalization starts to play out, is that they'll move towards a more trustless money where they can trust in math, but maybe not another nation.
I'm going to make a controversial one as well. I think once AGI kicks in, I think we're going to be back to fiat paper currency during some period. The next, I don't know, 4 to 6 years, but yeah, let's see if that comes, if that happens as a reality. Jesse, thanks for being on today. Where can people find out more about you?
Yeah, you can follow me at Jestifer_BTC on Twitter or X, or you could follow the company at Amboss Tech.
So that was Jesse and Charles for